Hello friends, how are you all? Tell me, today we're going to discuss Ind AS 40. It is video number 4. In the past 3 videos, I have explained many concepts related to investment property to you. They were easy and basic, but then the discussion moved on a little ahead. Firstly, I told you the meaning of investment property. Then I told you that it was out of scope. Then I told you Ind AS 40 has relationship with Ind AS 116 in operating and finance lease. So then I started discussing various issues with you all, right? And still we are doing point number 1 of concept number 4, which is various issues. I had left my last lecture at point E, right? And my assumption is that you have revised all of the content which we have already done. What I have taught you is memorized by you and information is in your mind. I assume that you are constantly revising. I hope that is true. Because my dear, I won't keep repeating the same old things in front of you. So I'm starting my lecture from here. What will be covered in today's lecture? I will first explain a point to you, the one about consolidation. Then my concept number 4 will be concluded. My theoretical part will be finished. Then I will start with concept number 5. And in concept number 5, we will use the calculator today. Everyone is happy. Today we will do practical questions. My goal is to have you complete at least 4 questions in class. Is that clear? At least 4 questions in class. And 3 questions as homework will be given to you. So total 6 to 7 questions will be done by today. Let's not waste any time. We start with this concept. Now the child has doubt that consolidated financial statements has any link with Ind AS 40. Is it possible? There is concept of holding and subsidiary, and then it is concept of investment property. How will you link these two? So for this I will give an example. Please listen carefully. You have to listen carefully to what I have said. And I had said at the end of the previous video that this is a bit complex. It was complex because you had to be patient and listen to everything. Okay. And if you didn't listen to me, then the concept will get lost. It will not be able to reach you. Please listen carefully to me. You can increase the speed. Do not skip or fast forward. What is the concept? This is interesting. Let's assume there is a holding company called X Limited. And there is a company, a subsidiary company, Y Limited. In our syllabus, there is a special topic, Ind AS 110 of consolidation. And it will be taught in it that the holdings financial statements and the subsidiaries financial statements, how do we merge them? How do we prepare CFS? So students, today I will not be explaining how to create CFS to you all, okay? I am just explaining what is the relationship of Ind AS 40 with the consolidated financial statement. Is that clear? I will discuss the relationship between Ind AS 40 and CFS. Did you get what I am trying to say? For example, listen carefully. I am telling you this for the 5th time because this concept is a bit tricky. Listen to me. X company has let out Y company. X company has let out Y company one of its investment property. The question says that X company leased its investment property to Y company. Okay. I will explain this in a standardized language. Okay. The holding company has leased its subsidiary company an investment property on rent. Holding company will make its standalone financial statements separately. Subsidiary company will prepare its own standalone financial statements. Now students, what are standalone financial statements? Standalone means their own. The holding company will first prepare its financial statements. The subsidiary will prepare the balance sheet, P&L notes and cash flow. Balance sheet, P&L and cash flow notes. First, both will prepare their own financial statements. When both of their financial statements will be prepared, then we will merge it to create the CFS. So students, I haven't talked about CFS yet. I'm talking to you about SFS. If I talk about standalone financial statement, so the holding company has leased an investment property to its subsidiary company on rent. Now what will the holding company do? What will the subsidiary company do? I don't need to tell you. Why shouldn't I tell you? Because I have already discussed concept number 2. So you all know the relationship between Ind AS 40 with 116. We will first check this. Students, I am not talking to the CFS. I am not speaking according to CFS. I am speaking in terms of standalone financial statements and SFS. I haven't started CFS. So students, firstly, I will first check the nature of the lease. Let's assume the nature of the lease is operating. If it is an operating lease, then the holding company will remain owner. This is the owner and it will be the owner and will continue to apply 40. The accounting for the lease rental will be done according to Ind AS 116. I explained this. This was explained in concept number 2. So according to lease rental accounting 116, and the owner will remain the owner, the lessor is the owner and he will keep applying Ind AS 40. If your lease becomes a finance lease, so in a finance lease, the ownership will transfer from the holding company because we will assume the lessee as the assumed owner. So this subsidiary company will become the owner and we will ask him, what will you do? He will say that he will use it. So we'll apply 16. I will cover all the leases. So in all leases, we will ask about their choice. I've explained the entire story in concept number 2. I shouldn't have said this again to you all, but I mentioned it just to connect the concept. Is that clear? So if you ask me, what will holding and subsidiary company do? So go to concept number 2, read the relationship between 40 and 116. But in today's class, I'm going to tell you something new, okay? I will not waste time. So listen to me, be attentive. Holding company has prepared its books. The subsidiary has prepared its books. Both have prepared SFS. We have already done what we had to. Now holding and its subsidiary together will make CFS. So students, we are also told in Ind AS 40 that what will be the status of the investment property in this. Understood? The first condition is holding and subsidiary companies together form a group. The transaction of the lease, holding has leased to the subsidiary. So the lease transaction has taken place within the group until they were both separated. We were dealing according to concept 2. But now I am creating a CFS. So how do I see this in the CFS? In the consolidated financial statements, how do I deal with this transaction? I'm thinking about it. So students, Ind AS 40 first of all says that when you are preparing group statements, so holding and subsidiary are combined. Is it clear? So these two together form a single entity. The statements of the group are presented as a single entity. The holding company and subsidiary are treated as one entity. So when you prepare CFS, so this is one entity, holding and its subsidiaries. This has now become a single entity. Previously there were two, but in group treatment they become one. So students, Ind AS 40 says that how they can lease between themselves, then suggesting they should eliminate the lease. I am only saying that when holding and subsidiary companies are separate, so in SFS you do what you learned in concept number 2, but when preparing CFS, the first thing that happens is transactions between them are eliminated. The lease between the holding company and the subsidiary will be eliminated. Is it clear? When I am preparing the group statements, I am the holding company, I am the subsidiary. If I am single entity, how can I enter into a lease contract with myself? So the first thing is to eliminate lease. Then some students start asking about which lease. It doesn't matter if the lease is operating or if it is finance. Transactions between them are eliminated when you become a single entity. So how can you have a lease contract with yourself only? When both are combined, one gave an asset and the other took it. It was cut off because the asset came back. Is that clear? Students, holding gave an asset to subsidiary. Both of them recorded it in their books. Now both of their books are combined together. The thing I gave has returned and lease is cancelled. Whether it's an operating or finance lease, it doesn't matter. First point about Ind AS 40 is that when you prepare the CFAs, the holding and the subsidiary and the transactions they will do. Students, this means that if the members within group engage in lease transactions with each other, those transactions will be cancelled. Secondly, the other thing is worth listening. The holding company leases the investment property to the subsidiary and the subsidiary uses that property. The holding company gave a property to the subsidiary and the subsidiary is using that property. Using it means that they are using it in business. So there are two things here. The first is lease within the group. Leases between all the group members. And the other one is the asset is also within the group because holding has given an asset to subsidiary and the subsidiary is using it. So the asset is being used within the group. So your group statement is that lease was cancelled. If assets are used by subsidiary or holding, they are considered single entity. Our word is use. So we will apply Ind AS 16 to this. Okay. First case, the lease is happening within group. Then the second case, where the asset is still within the group because the one who received this asset, he is using it in business. So when we prepare CFAs, the lease will be cancelled. So that asset is being used within the group. Use means that it is being used in some business. So we will apply 16 inside the consolidated financial statements, not 40. So if holding company has leased an investment property to subsidiary company and you are preparing CFAs, so 40 will not be applicable in the CFAs. It will be 16 because that asset is still with me. Is that clear? Holding and subsidiary are separate. So in SFAs we will do what we learned in concept number 2. But students, when we talk about CFAs, both are one. When both parties are one, then lease is cancelled. And the asset, it doesn't matter if holding or subsidiary company uses it because group is using it. So when an asset is used in group statements, that would be covered under Ind AS 16 because it is property, plant, equipment. Ind AS 40 is finished. Okay. It is not an investment property. It is PPE. So your answer might be different within the SFS, but your answer in CFS will change. Okay, students? Any case study can be included in the paper. I'm telling you this. So if the paper asks you to tell the answers of holding and subsidiary, what would the answers be? And what will be the answer in CFS? So you may have to explain it from every angle. So when you will see SFS of the holding company and the subsidiary company, then you have to see whether it is operating or finance lease. You will have to trace everything. But when you prepare CFS, first thing to consider is lease is cancelled because they both are one. Okay, then check where the property is. The property is being used within the group only. Just apply 16. I'm changing the case. So the holding company gave an investment property to subsidiary. The holding company has leased investment property and this subsidiary company has let out it to a third party named Z. The subsidiary was using it here. So the answer came out 16 and we said that it was used in the group. Now see, holding transferred its assets to subsidiary and subsidiary has leased it to third party. Students, think and tell me, if your property went to third party, then it won't be used in the group. Then it went outside the group. And if your property goes outside the group, then the answer will change. So now what we will do is first eliminate the lease. So the lease is eliminated. The second step, now check if your property is in the group or is it not there. No, students, it's not within group because it's with third party. You ask the subsidiary that the lease you have given out, is it an operating lease or a finance lease? The subsidiary says it is an operating lease. Okay, so it is an operating lease, which means the subsidiary will be the owner. In an operating lease, the lessee remains the owner. If a subsidiary company leases out an asset on an operating lease to a third party, then ownership will remain within the group and we are getting rent. Here also property was inside the group, but it was being used. The property was within the group but was being used, so 16 was applied. The ownership of the property is still within the group. However, you have leased it to a third party on an operating lease and you are getting rent. So we can apply Ind AS 40 here because it is being rented out. So this means you need to check whether your investment property is being used within the group or it is on operating lease within the group. If any group member is currently using the property for their business, then it will fall under Ind AS 16. If that group member leased it out on operating lease and rent is coming, then Ind AS 40 can be applied. But if it becomes a finance lease case, if this happens, then it is matter of concern because in a finance lease, ownership transfers from the lessor to the lessee and we will consider the lessee as the assumed owner. So then neither the holding company nor the subsidiary company owns the asset. Your group does not have such an asset. So the assets and their ownership have gone outside the group. So now who will we ask? Now we will ask Z. We will ask his intentions. So we will move according to this. So there are three cases. The first case, the holding company gave an asset to the subsidiary which then started using it in its business. So when we combined holding and subsidiary company, I said it's being used in the group. Apply 16. Holding provided asset to subsidiary and it provided that to third party. After that, we really need to see where the ownership lies. Ownership is still within the group because I assumed the case of an operating lease. Then we can apply Ind AS 40. The lease has been cancelled. The lease between them is cancelled. Ownership is in group but rent is coming in and it is not being used. If your asset is within the group and is being used by the group, then we will apply Ind AS 16. The ownership is within the group but it is on an operating lease. If you are receiving rent, you will apply Ind AS 40. But if that property is given on finance lease, then group will not have ownership. So what are the three cases? Ownership plus use, first case. Ownership plus rent, the second case. No ownership, third case. Why am I saying this? Ownership was given by holding to subsidiary and subsidiary used it. So property and lease both are within the group. So ownership and use are both in the group. Second case, where ownership is in group but usage is by third party and nature is operating lease. If ownership is established, you can apply 40, but if you have taken it on finance lease, so now I understood the issue. This is very important topic. Be attentive. Accidents are bound to happen when you lose focus. Do you know how questions will come in your paper? It will have case study and will ask you holding companies SFS, SFS of subsidiary. And then it will ask you what to do in the CFS. Okay? So you will do it very calmly and patiently without having any rush. We need to think from perspective of each company. I'm assuming another case. Listen to me. We have holding, we have subsidiary, and another subsidiary. There can be multiple subsidiaries. So holding company has two subsidiaries. Holding has leased investment property to this. and it leased its investment property to this. Lease renewed twice. This is the lease. This is sublease. And the other subsidiary is using this property. Okay. Holding leased property to S1. S1 subleased it to S2 and S2 is using this property. So when we will talk about the SFS. We will discuss about the standalone financial statements. Okay, students. So we will ask holding whether it is operating or finance lease. Then we will ask it which lease it is. And we will move as per that. But when we talk about CFS, students H plus S1 and S2 will all come together. Is that clear? So when all three will get together. So the investment property it has with itself, that will come back to the group. So it means the holding gave it to S1 and S1 gave it to S2. But when group statements are made, property is returned and lease is cancelled because it becomes visible in group. Now we will see what the status of this is. It is being used. This means that it is being used. Here you apply 16. Lease is within the group. And the property is being used within group. Apply 16. Another case is there. This is S2. It is third party. This is Z Limited, which is third party. They have leased it out. Now we will ask S2 that this let out is of which nature? Is it done under operating or finance? If it says operating lease, so the ownership will remain with S2. The ownership will remain with S2. This means property. Ownership is still within the group. When it is an operating lease, so in operating lease, we don't transfer ownership to third party, they are tenants. So ownership is within the group. So this means we can apply 40 over here, okay? It's a lease. Yes. Has the ownership gone? No. Is it being used or rented? If it is for rent, apply 40, and if it used, apply 16. Third case is of finance lease. So they have finance leased. Z Limited, which is a third party. So when finance lease is made, lessee becomes assumed owner. So the ownership has ended from here. So nothing will be applied to CFS. Neither 14 nor 16 because ownership of asset within your group is terminated. Okay. You have de-recognized the property and you have nothing with you. So what will you write? So now we will ask Z that it has property and assumed ownership. What will it do with it? So we will do as he says. You already know this. If it says it will use it, so apply 16. If it says it give property on operating lease, apply 40. If it gives it on finance lease. Then it will also slip from his grasp and go to fourth party. This is what you need to understand. Okay, students. If you didn't understand, please rewind and watch it again. It won't be like that. There will be no communication gap between us. I myself repeated 3 to 4 times and revise it. And children also know this, right? But the concept is good. The topic of investment property is generally taught in 1 to 2 classes. Whether you study from anyone, be it famous teacher or a normal tuition teacher. So, students, you can try and learn this from your favorite teacher also. But if you ever talk to their students, investment property is completed in 1 to 2 classes. I get confused about the quality of the content taught in those 2 lectures. Children who are training at Big 4 or who are training in good firms or who are watching compliance of Ind AS, they know where I am and what I am teaching. Because these are practical things. Do you get it, students? I don't take credit. I explain what is written here. There is paragraph about this concept in study material. That is why I told you. I don't go beyond study material. If there is something written in your study material, I have explained that. Look here. Holding and subsidiaries. Group is formed. A holding company with multiple subsidiaries also forms group. So, which word did I emphasize? I emphasized on the word group. Don't look whether it is holding to subsidiary. Is it subsidiary to holding or subsidiary to subsidiary? What is direction of transaction flow? We do not care about it. Students just focus that the transactions is within the group. Rest of that will be taken care in 110. When we will start holding subsidiary, look at consolidation. If lease agreement which has been executed between the members in a group then the following points may be considered we will eliminate lease contract while preparing group statements. Which has been entered into the members of group because intercompany transactions. Students, you might remember this from inter. Debtors and creditors cancel each other out. Mutual BRBs are cancelled out. Mutual ventures and investments are also cancelled out. All the transactions are cancelled out. Even if holding and subsidiary have sold stock to each other, we eliminate its profit by creating a stock reserve. Clear? Intercompany transactions are cancelled, so lease would also be cancelled. While preparing CFS, come to second point. The following flowchart. For selection of appropriate Ind AS on investment property in CFS. I have two cases. I would like to make a request to all students. When I'm making a flowchart, please make sure to read the heading. Is that clear? If you understand these written points, you will understand the case study. If leases within the group, the first condition, if lease is within the group, lease is within group. If the holding and subsidiary members in group lease among themselves, okay? So this will be completely satisfied. And this is also used within the group, okay? They're using with each other. They haven't given it to anyone external. Your building is being used within your own group, okay? It's used within group. So what will we do? We will apply Ind AS 16. Sixteen will be used. I have one word, used. You use it in your business. You can rent it out to your employees. Wherever the word use appears, the owner occupied property will be included. The lease is within the group. The lease is within the group, but investment property has been let out to third party outside the group. Lease was made within the group, but one of your members from the group has acquired that property and gave to someone outside the group. He let it out. Let out. If it's let out, then there are two ways. If it's a case of operating lease, we will apply Ind AS 40 in CFS. And if it is a finance lease case, then the third party will become assumed owner, and then no application of 16 or 40. The third party will become the owner. If lease is within group and usage is also within group, then apply 16. The lease is within the group, but on operating lease it's given to third party. Apply 40. Lease is within the group, but if you've leased it to a third party on a finance lease, then it can't be settled in CFS. I have told you so many points. The first point, meaning of investment property. Land and building, which is held for rental purpose or for long-term appreciation. So what else isn't included? Depending on the use of the building, the Ind AS will change. If you use in agriculture, it's 41. In mineral oils, 106. To be sold in near future, Ind AS 2. Ind AS 16 if you use in the business. Held for sale, 105. I made you write 7 examples. Then I told you the relation of 40 under 116. So the work is completed. Rentals accounting. 116 will look after it. You have to look into the properties accounting in terms of both operating and finance. Then I showed you various issues. You have given the property to the employees. It's owner occupied, whether the rent is charged less, charged full or isn't charged, it makes no difference. We will cover that in 16. It's indirectly assumed that employees will remain. They'll remain emotionally attached to your business. The business will benefit. Then I spoke about land. You bought the land, but you haven't thought about its usage. You didn't decide yet, then just put 40, the concept of appreciation will come in. A case of mixed property, if it's separable in the mix. So we'll use different Ind AS. If it is inseparable, we will check the significant portion. This is what I told you. The ancillary services was explained. I'm providing security maintenance. It won't make any difference to the classification. But the hotel is external and falls under Ind AS 16. I have explained this entirely in the last 2 to 3 videos. I have summarized it for you today. Today I also explained the CFS to you and what to do with it, based on my instructions. Please once, let's check 2 or 3 questions. I have question number 16. I marked it as important. First I'll do 16 for you. Then I will teach you 17. This is even more important. First we'll do the 16th question. Anyone wants to read the question? If you need time, I can pause. I'll start with questions. S1 limited lets out a property to S2 limited. So S1 lets out to S2. I will write down. S1 has given one of its properties to S2. Okay. So this has become owner, meaning lessor. This has become the tenant. Meaning lessee. It's lessee. So under an operating lease, the point is that if we talk about operating lease, and I'm not making CFS. For example, I am talking about the SFS, okay? SFS. I'm not talking about CFS right now. What will I do? First thing is, Ind AS 116 will handle the rentals accounting. This S2, this will pay rent to S1. Rent paid will be listed in expense while rent received will be listed in income. This will be taken care by 116. I don't have to do the rental accounting. Let's talk about property now. In S1, as per operating lease, property is given to S2. What happens in operating lease? Ownership does not transfer here. The lessor becomes the owner here. He is the owner today and will remain to be the owner tomorrow. This means that S1, right? The S1, this will use in AS 40. And this S2 is not considered as assumed owner in an operating lease. So we won't even ask him what he will do. Why would we ask him, right? In an operating lease, the lessee isn't inquired about anything. Rather, the lessor is considered to be the owner. Because in a finance lease, the situation is different. There is a sales contract involved. He sold it and she bought it. So they ask him. It's not the same in operating lease. In operating lease, the one who is your lessor becomes the owner. So your S1 here will be subject to Ind AS 40. Okay, 40. S2 here will do nothing. He'll just keep paying rent. This point we discussed in concept number 2. But I need to see what's in the question next. The question says both the companies are actually the subsidiary of P Limited. Okay? P Limited. This is how the chart is. P, S1, S2, it has given the properties on operating lease. These three will form a group. And when they form a group, they'll create CFS. So their mutual transaction will be cancelled. So we'll write P plus S1 plus S2. When we put all three together, the property will return to the group. Now we need to see that the property is being used or leased to a third party. So analyze. How would different companies treat the property in their respective separate financial statements? You will have to say that what will happen in SFS, right? What will happen in the standalone financial statements? And you also have to say what will happen in the consolidated financial statements. What will happen in CFS? So the CFS is clear to me. You might think, CFS, how is that clear to me? Tell us, has S2 subleased to any third party? Did the question mention anything of that sort? Okay, S1 has given its property to S2. Now I hope this is understandable, right? Did S2 give it to someone else? When S2 did not sublease it to anyone, so this means that your property is within the group. If it is used, then we'll apply in AS 16. That's it. Third party's name wasn't mentioned and there is no sublease done, right? So this means that this case will be applicable, right? So yes, this case will be applicable here. This is the case. Leases within the group, absolutely. The property is also held within the group. It's being used within the group. Was there any third party? Or the name of any third party? No, right? Then don't stress, just write the answer. I'm writing the solution to question number 16. In the given question, following statements may be considered for application of different standards on SFS and CFS. First of all, standalone. We can say standalone or separate, it's same. Separate financial statements. S1, it has given its property to S2 on an operating lease, which indicates that it will keep the ownership so S1 should apply in AS40 in its SFS for presentation and accounting S1 should apply in AS40. S2 under operating lease. In an operating lease, does the lessee ever record the property? No, the lessor remains as the owner. The lessee never records the asset it means that there will not be any recognition of IP it will record payment of it will record the payment of rentals only. Okay, this is only for rentals. In consolidated financial statements, This property is within the group. The given property by S1 to S2 here is still within the group because S2 has not given it to a third party. So we should apply the Ind AS 16. Ind AS 16 PPE on the use of such property. You can do whatever you want in your SFS. You have gathered all in CFS. Your lease has been cancelled because the asset has been returned. It's still being used within group. Then think from the group's perspective. In business, when we use something, we call it as PPE. So our question number 16 is completed. You should go to question number 17 and quote its answer just like this. Students are wondering, in the question paper, how many marks can we expect here? So according to me, this question in exams, it can come up to 4 marks. This can be solved only by a student who has a clear vision of what to do in which company. Let's go to 17. S1 Limited lets out a property to S2 under a finance lease. Consider this point. I will have to make the chart very carefully. S1 gave a property to S2, okay? And that too on a finance lease. Now tell me, in a finance lease, who will inherit and own the property? You will say that this is a lessor. And this is a lessee. The lessee here, we consider this lessee as the assumed owner. And we consider lessor to be assumed seller. When S1 has leased its own property to S2, that too on a finance lease. So now the property has been taken out from S1 Limited. S1 will only receive rent and it will be taken care by 116. Now this S2, it has to pay the rent and also this will be taken care of by 116. But S2 needs to recognize the property as well. And I made you pass this entry. This entry is passed, IP is debited to S1. This entry will be passed as S2 account debit to the IP. So basically he sold it, then he bought it. And will continue to pay the interest. Because we consider this a hire purchase case. I will clarify the rest in 116. Now keep one thing in mind, focus on it. Who has the asset? S1 does not have the asset, okay? The asset is with S2 and S2 has it. He became assumed owner. Read the question further. From which perspective did I explain you all this? SFS. It was explained based on the standalone financial statements. As per SFS I explained. Let's move on. What's in the question ahead? Both the companies S1 and S2 both are the subsidiaries of P Limited. Both have the same father, P Limited, holding company, also called parent company. As soon as P became the holding company, these became a group. Holding and subsidiaries together form a group. Subsidiary can be one or multiple. The transaction is happening within the group. Fine, then S2 sublet out a portion of the property to K, S2 let out a portion to K. What did this S2 subsidiary do? A portion of its own property, a portion is let out now. To whom? To a third party. Which third party? The third party is K. In which lease? Dear kids, he leased it under an operating lease. Under operating lease. Now tell me, if S2 has sublet a portion to K, alright, S2 sublets to K under an operating lease. So in an operating lease, we will not give ownership to K, as it is about operating lease. So K will just make use of it and pay the rent. So that means the property is within the group, because ownership isn't transferred to K. Ownership is within the group. It's not transferred to K, as this is operating lease and rent is coming in. So now what we will do is, there is a let out portion for which we'll apply 40 to it. What word is being used here? Portion. This means you have not released the entire property. You didn't release fully. You have let out just a portion of it. Hence, apply Ind AS 40 to the portion that was let out on operating lease. Now you all think, if there was a finance lease instead of an operating lease, then if you had taken a finance lease instead of an operating lease, then K would have become the owner. That property wouldn't be yours thereafter. And you might have been in shock, not knowing what to do. Then I would have told you that no Ind AS group will be applicable to the portion that is sublet. But now, this is a case of operating lease and I am the only owner here. The ownership is still within the group. You can apply 40. If it is being used within the group, then apply 16. If there is ownership within the group and it is an operating lease case, apply 40. The property is out of the group on a finance lease with a third party. Then ask the third party what they will do. It's beyond our control. This isn't a finance lease case. Okay, listen to this. The word portion is used here. Portion. Portion means there will also be a part or a portion that you have not sublet yet. So where is the portion that was not sublet yet? It would be in uses and in consumption, right? Since the portion that you have not sublet is being used, then Ind AS 16 will apply. So for the portion you have subleased or sublet on an operating lease, apply Ind AS 40 to that. What a lovely question. What's in the question? It says the same thing. Question will say the same thing. What's that? The question has given. Analyze how different companies would treat property in their respective separate financial statements, SFS and CFS. You have to explain point of view. Write solution. I am explaining the solution to question number 17 here. First we will write separate financial statements. Separate financial statements. So first we will write, we have S1 here. In the given case, S1 has transferred the asset to S2 on a finance lease. Okay. So now S1 will have to derecognize the given asset. Due to which we will not consider the accounting of the investment property. This one has to be derecognized. S2 under a finance lease. Lessee is always assumed. As an owner, due to which S2 will have to recognize the asset in its books further. S2 has sublet a portion of leased IP to K under operating lease. Which indicates that S2 will keep the ownership. So now S2 should apply in AS40 on let out portion and in AS16 on used portion. The property was taken from S1 and was given to S2, who became the assumed owner. We asked him what he would do. He says, I will rent out one part. In AS40, what happens to the property he won't rent? He'll use it. That portion is being rented out by him. Put 40 on it. Apply 16% to the used portion. When we discuss CFS, then the lease will be cancelled. This property has been third party outside the group. We should write we can write that a portion of the property has been given to a third party. His name is K. Outside the group, under an operating lease. So now write another line here. It means that ownership of the property will remain in the group. So now we should apply in AS40. This is the whole concept. So I think I have explained all the theoretical points to you, right? And now all these points are conceptual. It was necessary for clarity, and for you will have to revise this, students. But let's say if you haven't revised and suppose you took these things lightly, then there will be a problem. Holding subsidiary group, holding a subsidiary, this will run according to concept number 2, okay? And the group will go according to their own will. And you will have to think twice. All right. Now come on a new page. Okay, let's start with a fresh page. And I am giving you a heading. Concept number 5. Initial recognition of investment property from here. Your practical parts are starting. Initial recognition, investment properties. Initial recognition. Initial recognition means to pass the entry of something for the first time. So what would be the first entry for an investment property? It will be to purchase. So let me tell you, when we acquire an investment property, first purchase, it will be converted to asset. these assets must be purchased. So here, indirectly, I'm talking about acquisition. Initial recognition means acquisition of investment property, and there are many more ways of acquisition. You can buy it with cash. You can construct any land and building yourself. This is called self-construction. And you can also purchase via debt on deferred credit. You can even exchange it. Your asset has been given and their assets were taken. Moreover, you can also take it on finance lease and become an assumed owner. Okay? I will tell you 5 ways. Of what? Of acquisition? Under investment property. Make a flow chart. Students, when we talk about initial recognition, so we have 2 types of books in front of us. In front of me, there are 2 types of books. Let me tell you which ones. In the books of the actual owner, in the books of when we talk about the actual owner, so this is about any property. It can be purchased in 4 ways. Okay. 1, 2, 3, 4. Purchase by cash. If you are buying a property, you will have to make a payment even in cash. Self-construction of IP. You can build it yourself. Buy a ready-made building or you can build it yourself. You'll have to do one of the 2 things. Some people are very picky. They say, no, I'll design the factory myself. They like designing their own project. They do not like a pre-built building. So either take it in cash or build it yourself. Purchase on deferred credit. You don't have any money today. They make a down payment and then pay the rest in installments. Exchange of assets. I had a piece of land in Punjab, okay? But I needed a plot in Delhi. I made a trade. What I did was I found someone who wants to move to Punjab, alright? I told him, give me your plot in Delhi and take mine in Punjab. We'll have the valuation done and settle the difference in cash. Exchange can also occur. We will get there. These are practical questions. If investment property is taken on finance lease, there are 5 ways, okay students? One, 2, 3, 4, 5th. There are 5 ways. You can purchase the property, and when you purchase, so what will be the first entry? Investment property account debit to the bank. Debit what comes in, credit what goes out. Asset account debit to cash. When we go to buy something and pay for it, then cash goes out and the asset comes in. Do I have to explain these things? These things now in the final level, tell me. You should be able to understand the gestures now, right? No? I should tell? I will tell you anyway. The first case, purchase with cash. One thing all children know, which is this entry will make it. The entry has been passed, but everyone has the same question. At what amount will this entry be passed? The entry itself isn't the confusion, but the amount at which the asset is recorded in the books is confusing. And this is called cost of assets. Now please pay attention, students. The amount at which you need to record the investment property, it is called the cost of the asset. And you will need to learn how to compute this cost, okay? Because until you calculate the cost, you will not know the amount. So how will make an entry without knowing the amount, right? So students, when an asset is purchased in cash, so when an investment property is purchased in cash, then you always have to make a statement first, okay? Statement showing calculation of its cost of the asset. The statement showing the calculation of the cost of investment property. First point is the purchase price. You buy a land or you buy a building, you will have to pay money. To whom? To the vendor. Now suppose there is a building for sale in your area. How do you get to know this? The broker tells you, right? The broker came to me and said that Mr. Jindal is selling this plot. Get a meeting arranged with the party. They arranged a meeting with the client. There are 3 people sitting, me, the broker and the seller. I said, okay, tell me. They said, we need 15 crore rupees. I said 14 and a half. He said to do it at 1480. The price that the buyer and seller have agreed on, the deal that they have made, it becomes the purchase price. Once the parties have decided on the price, then I have to pay 14 crore 80 lakh rupees to the other party, okay? And what charges will the brokerage charge for this deal? He will also take 1% from me, 1% from the other party. Both the buyer and the seller will pay. So let's say I am going to purchase a property. So I have to do some payment to the party from whom I bought the property, okay? A commission needs to be paid to the broker who finalized the deal and brought it to me. He's taking brokerage. Then I will go to the registrar's office. I'll tell them to register the property in my name. And stamp papers are required for registration and transfer. You will also have to pay stamp duty. These are the expenses that we see practically in front of our eyes. There is purchase price, stamp duty, and you have brokerage and commission, or for that matter, any expense that makes you feel that the investment is directly related to purchasing that property. Understood? Or for that matter, any expense that you think is related to the purchase. You can include that in its cost. So then add up all 4. The cost is known, make an entry in the cost. Pass this investment property to the bank. The discussion's over. That's all the work required. And there's not much work. But you should also know this. These are some expenses which will try to confuse you to come under the cost and expenses category, but as clearly stated by IND AS 40. This is not part of the cost. It will go into profit and loss. This is your debit against profit. Alright? And then let me tell you that there are some expenses that will confuse you and tempt you to include them in the cost. Okay? However, in Ind AS 40, it will be written off in profit and loss, and we can't include it in cost as well. Understood? Most importantly, the main cost includes three things when we buy property in cash. Okay? First, you need to take the purchase price. And then you have to pay brokerage, and then secondly, stamp duty. Okay? There are three things that need to match. I've done so many property deals. I've never seen a fourth expense. Trust me. There is a stamp duty expense. There is a brokerage fee and a purchase price. Fourth, as much as possible, 1,000, 2 or 5,000 rupees. If someone has to pay for some little expense. If you need an urgent document registered, you've paid 1,000 rupees and 2,000 rupees to get it done quickly. Sometimes people bribe and giving 500 rupees to peon to make your work done. These small expenses you barely notice. You can capitalize this by putting it in other expenses. Okay, now we can't write in the accounts balance sheet that we gave a bribe, right? 2,000, 5,000 or 7,000 to avoid issues in registration. For our cost calculation, we include it under the miscellaneous expenses category. I'm giving you a practical tip that won't be on the exam. The three main expenses are purchase price, brokerage, and stamp duty. But the expenses that I was just talking about now, this will confuse you about whether to include it in the cost or not. But you should not include it in the cost. So what are the expenses? Let me explain. The first example. Suppose, let's say there is a company called X Limited. They have one shopping complex. It was built. They have built a shopping complex. And then within this, 70 offices were built. Okay? There is space for 70 offices. Meaning, and you see, we can rent out the office to 70 different people for purchase. Letting out, listen carefully. I'm talking about those expenses. The expenses that you think should be included in the cost. However, Ind AS 40 prohibits it. I'm talking about those examples. The company built a shopping complex with 70 offices. And all of these need to be laid out. If you are going to rent it out, an income will generate. So it's an investment property. There is no doubt. Now, how do we tell people that we have built a shopping complex? And there are 70 diseases. So what we did advertising on the paper. So now the speaker states that they advertised in both print and digital media. 20 lakh rupees were spent to tell people this. The shopping complex is ready. If you want to rent it, you can. In AS 40 tell us that the amount that is being discussed or we will spend on advertising, any marketing or promotional expenses that you incur, the money that you are incurring to rent out your property, that will not be included in its cost. The money that you are spending, it is not related to the property acquisition. Okay? This is related to renting out the property. Understand this. This will go to the profit and loss account. It has nothing to do with its acquisition. So if you have any questions, okay? If any advertising expense is seen, you have to include it in the cost. One more point. Inauguration expenses. Don't you understand? Let's say we placed an ad in the paper. We placed an ad in the newspaper. For example, DLF built a mall. There are shops inside this mall. The mall is ready and we want to rent out the shops. DLF does not want to sell the shops in this mall. It wants to rent it out. So what did DLF do? First of all, marketing is done at the India level. Putting ads on every newspaper and news channel to report that we built this mall. Promotional expenses were incurred. And now the mentioned in that ad that we are inviting all brands to attend our inauguration ceremony on a grand level. And they also had an opening ceremony for this mall in which some people were invited and given free food as giveaways. Their free entertainment appearance is made and a whole system is built around it. They spent a significant amount of 50 lakh rupees on it. Upon the inauguration of the property, to attract people and make the property popular, so people know about it and they'll come out to rent it, right? So if you perform a ceremony like this, have you ever seen jewelers? A famous jeweler often opens a new showroom with a grand celebration. He even invites Bollywood celebrities sometimes. There's even a big ad in the newspaper for it. This celebrity is coming to our outlet today. They invite the celebrity because there are two benefits. First of all, people notice. Secondly, they will go to the showroom to see the celebrities. And the sale receives support. So, expenses such as promotional, marketing, and inauguration ceremony. These will all be written off in the profit and loss account. And moreover, this has nothing to do with your cost, okay? Ind AS 40 has specifically mentioned this. You don't need to be confused. If you think that 50 lakh rupees have been spent, this is a capital expenditure, the benefit of which the property will receive from being rented out. People will know that this is a capital expenditure. The advertisement we are doing is a capital expenditure and it will maintain our reputation for a long time. Don't keep any confusion, it's P&L. Okay, and the third example. Let's assume we have a property. This property is vacant. We are looking for tenants. The property is vacant. If the property is vacant and not being maintained, if the property is not maintained, it will be ruined. What we have done is, for its day-to-day expenses, daily maintenance and security, we have hired a security guard. We have hired a cleaning staff who takes care of cleaning the entire property. If your property is rented out, then the tenant will take care of it. You are taking care of the daily maintenance of your vacant property. They are spending some money on it. So this will also affect your profit and loss. It's related to maintaining the property. It's not about acquiring. If you have any property which is vacant, it is vacant and you are maintaining it. It's your operating expense. It's an operating expense. The costs associated with your day-to-day maintenance and servicing needs are called operating expenses. So even by mistake, promotional or marketing expense should not be included. Inauguration ceremony expenses should not be included. We don't need any daily servicing. Here comes the fourth point. Fourth point. So students, I just told you, purchase price, stamp duty and brokerage, or let's say any other expense, which is directly related to the acquisition of assets. This becomes the cost. So basically, Ind AS 40 has one more point in it. If you have paid any tax or duty, but generally, we pay the stamp duty at the time of registration. If there are any pending taxes or duties, it varies from state to state. There is no such tax or duty in Delhi, and I don't know about other states. It's written in Ind AS. If there's any tax or duty that you have to pay at the time of property acquisition, so that will also be included in the cost. But that tax or duty should not be refundable in nature. Clear? If any duty or tax is refundable, mostly you spend the money and receive a refund. Only non-refundable taxes are included in the cost. Means promotional expenses, ceremony expenses, and day-to-day servicing are not included, okay? And any refundable taxes will also be not included. Only non-refundable taxes will be charged. Okay? But there is also an exception. This is an exception to point number 3. The third point has one exception, okay? and this is the renovation expense. Suppose, let's say, so day-to-day servicing and day-to-day maintenance. Suppose when you spend some money to keep the property clean, okay, that is operating expenses, it will go to P&L. But if you spend money on renovating the property, then renovation means to work on the key elements of a property are the floor, ceiling and walls. You have changed the marble or tiles on the floor. You've done the ceiling work and POP, made a few changes. And what else? Suppose you got the walls done too. I'm not talking about repairs, I'm talking about renovation. If a capital expenditure is done on walls, floors or ceilings, then you can capitalize it and it will be included in the cost. As renovation increases the lifespan of your property, the property's benefits increase and the rent also goes up. So capital expenditure, it's not a servicing cost, it's a capital expenditure, a renovation that adds value. So if you are getting your property renovated or you are getting it painted and whitewashed, if a wall has collapsed and we are getting it repaired, that's maintenance. You change the marble, you change the walls, you change the ceiling, you changed everything, okay? But this is a capital expenditure and its benefit will be visible because the rent for a good property is also good. Suppose you want to watch a movie. If you go to the theater, you'll pay 300-400 rupees for a movie. But PVR has built some gold class theaters in Delhi. What is the gold class? There are maximum 30 seats in a theater. They charge 2000 per head. If you don't want to watch a movie in a crowd, what to do? There is a luxury recliner seat. Ever seen one? It has a press button on it. The waiter will come and take the food order. The better the property, the higher the charges. Understand what I'm saying? This is what I am trying to say. I'm not saying that your theater is your investment property. That's a business. Showing movies is a business. It will come under PPE. For example, if we do value addition, then you will get good money from that. That's it. That's all. Is there anything left? Please write. I'm explaining this first. Write it down, please. If any investment property is purchased by cash, then the following statement shall be prepared for the computation of cost of we will make a statement. Statement showing calculation of cost of statement showing calculation of cost of IP. First, we will write purchase price. which is paid to vendor. Then we will add stamp duty. What do we call stamp duty? Transfer cost. Then we will add brokerage or commission to it. Brokerage or commission. Then we will add any other expenses which is directly related with acquisition of assets, which is directly related to the acquisition of investment property. If you think that any expense is related to the purchase, so you can capitalize it. But I have seen these three expenses in my life. This becomes the total cost. Items to be excluded while computing the cost of IP. As per the provisions, as per the provisions, the following expenses shall not be capitalized to the cost of but these expenses shall be written off in profit and loss account. First, there is marketing, promotional expenses. If any expenses is incurred on advertisement for letting out the IP, then if any, expenses is incurred on inauguration ceremonies. The invited influencing people when a car is launched, right? Let's assume I have a BMW 7 Series car. So whenever BMW launches a new car, they send me an SMS. I get a WhatsApp. We are launching this car. There is an event at our showroom. We will be organizing dinner. It will be to our program. There will be some activities. So they spend lakhs of rupees just on the car launch itself. Similarly, if you have built a property and you want to rent it out, for that you have invited some reputed brands so that they can come and participate. We are having the inauguration ceremony. Please come and check our property. They will come and check, they will see the location and people will know. These are all your promotional activities. Third is if any, expenses incurred on for its day-to-day servicing and maintenance, then written off in profit and loss account. There is also an exception to this. If any, capital expenditure is incurred on renovation of walls, flooring, then it can be capitalized to the cost of IP. You can capitalize the cost of the renovation. It can be capitalized. Day-to-day maintenance goes to the P&L. if any tax or duty is refundable in nature, then refundable tax or duty cannot be taken we can consider. I've run out of space. I'm going to the next page. We can consider only. Non-refundable taxes or duties. We can consider I have told you almost all the points. Now I want to do 1 or 2 questions. Please, can you just do it for me once? Please see question number 15. I mark this as important. It's 15th question. It's very simple. It will take 10 minutes. It looks like it's very difficult, but it's not. In the year X1, X2, okay, X Limited incurred the following expenditure in acquiring property consisting of 6 identical houses, each with separate legal title, including the land on which it is built. What does this question mean? The particular question simply wants to tell us that they have bought a property in X1, X2, and that property has 6 houses that are made in similar way. So you have bought an area, right? And within that area, 6 houses are built. If you visit Goa, in Goa, what's happening there? They develop a 1 acre property and build 5 or 6 villas on it. I'm getting the same kind of idea here. Purchased a property with 6 houses built on it, and all of them have a completely different title. So everything can be bought and sold separately. I understand what you're saying. What's the question trying to say? The expenditure incurred on various dates is given below. Firstly, they purchased that particular property on the first day of the April at 1 crore 80 lakhs. We didn't buy a house, we bought a property, and there are 6 units inside the property. So I bought all 6. Property word is being used. So this is 1 crore and 80 lakhs, right? Then on the 1st of April, they spent approximately 20 lakhs for the non-refundable transfer taxes. And this is not included in the purchase cost. This is obvious. We pay the purchase price to the vendor and the transfer cost to the government. So I have spent another 20 lakhs rupees. 1 crore 80 lakhs plus 20 lakhs. It's 2 crores. Let's move on. On the 2nd of April, there are any legal costs which is related to the property. You will have to pay 5 lakh rupees. The legal cost is 5 lakh rupees. Okay. So I added another 5 lakh rupees. On the 6th of April, X1, X2, they have launched an advertising campaign which is likely to attract the tenants. So we just wrote down If you advertise to let out the property, that expense will be recorded in the P&L. It will not come in cost. They organized an opening ceremony on the 8th of April. That we are starting the business. See here. Cost of ceremony will also go to the P&L. These 6 villas that they have built, these 6 villas will be available for rent. This advertisement and this ceremony is for that. Throughout the X1, X2. Okay, students, look. They have spent 1 lakh rupees towards day-to-day repairs, maintenance and other administrative expenses. If this is day-to-day, then it will go to P&L for cleaning the property. So 1, 2 and 3, all 3 will go to the P&L. So this means I will add up these 3. This is total of 2 crore 5 lakh rupees. This is my cost. They are 6 amounts. 3 will be capitalized and 3 will be recorded in the P&L. Does such questions come in exam? I don't know, I am doing it because they are in study material. Okay, next. X limited uses one of the 6 houses for the purpose of the office use and accommodation for its few staff. Yes, staff. When we give any of our property to our employees for their use. So that type of property is called owner occupied property. And we apply Ind AS 16 on it. I have purchased 6 properties. 6 houses are built. One of them is used for the office purpose and is given to the employees. So Ind AS will be applied on it. And on the rest 5, Ind AS 40 will be applied. This is a mixed property. It is the mixed property, but other than that, they are also separable because they all have different legal titles. The other 5 houses are rented to various independent third parties. Okay? We will assume one house as PPE and the remaining 5 as the investment property. How? The X Limited will account for all the above mentioned expenses in the books of account. Let's see how the expenses will be accounted for this. I am doing question 15. Calculation of cost of acquired property. What should I write first? First, I will write down the purchase price. Tell me what's the purchase price? It's the purchase price. 1 crore 80 lakh rupees. What was next? Non-refundable. Taxes. This is 20 lakh rupees. Any legal fees? Of 5 lakh rupees. Are expenses. If it is related to acquisition, it is considered as the cost. Two crore. 5 lakh rupees. We will write notes here. First note, in the given question, it is clearly specified that the company will use one house out of 6 houses for its office purposes and its staff. So, we should classify the specified house as an owner occupied property under Ind AS 16, while the others can be considered first is this note and the second. As per the provisions of Ind AS 40, we cannot capitalize. Advertisement, ceremony, and maintenance expenses, because these expenses are not related with are not related with acquisition of IP. So these expenses shall be written off in profit and loss account. We should write off these expenses in the P&L. Make the notes very clear. I have written the points. Okay, if I talk about the accounting entry, so I want to pass an entry in this. PPE account debit. Investment property account debit to bank. We incurred expenses of 2 crore and 5 lakh rupees. We will do 1/6 of this and 5/6 of this. You have spent 2 crore 5 lakh rupees, so you have bought 6 houses. So this will be 34 lakhs. 16,667. And this will be 1 crore. 70 lakhs. 83,333 rupees. Being this is the solution. We will apply in AS 16 to this. And we will apply in AS 40 to this. It is possible that all the properties may have different titles, so 1/6 and 5/6 in case of separable. Okay. Question 15 is done. Was it difficult? Have to write notes after reading expenses. I want to give you 2 questions for homework. Firstly, question number 9 is homework. And next, question number 22 is in your homework. You have to do these 2 questions yourself. It will take maximum 5 minutes. Let me quickly check both questions for you. One is 9th and the other is 11th. It's here. In 9th, you have to make a statement and calculate the cost. I will tell you about it. Like they have purchased a building for 30 lakhs. This is expense. Any transfer taxes for the property, any legal costs, all of these will be added to it. So, 30 lakhs plus 1 lakh plus 20,000. What does it say next? They have done some redevelopment. Redevelopment means that renovation has been done. It costed 2 lakhs to take permission. We have to take permission from government. If you want to build property in Delhi, you need permission from MCD. You spend 7 lakh rupees on construction. This includes 40,000 as refundable taxes. You may have purchased some materials and there might be GST as refundable. No problem. Then another 2 lakh rupees will be added and 6 lakhs 40,000 more because we don't include refundable tax. Subtract 40,000 from 7 lakhs. So, we get 6 lakh 60,000. Just total it. This will be your cost. 3120, 3320, 3339, 3980. 3980. Okay, do this question. Look here, 3980. Simply calculate on calculator. I have to give you question number 22 as homework. 22. I'm checking just one word in the 22nd. And that is its spelling is wrong. Now tell me if any future use cannot tell you the entity. Then the company has purchased a plot. And here buying a plot means buying a land. The use of the land is not known yet. What will we do with it? We will build an office. Build a property, what will we do? When we don't have a specific use for it. So I asked you to write down a point in class about various issues that we will assume it as investment property and apply 40. Because even if you don't do anything, land will get appreciated. So this is in your homework. You should do this. Let me tell you one thing. Although management has not decided the use of the property, after parks development takes place. In the medium term, the land is held for capital appreciation. Let's say for capital appreciation. And standards consider land as held for capital appreciation. If you connect the land with capital appreciation, then 40 will be applied. Therefore, I am giving you homework. You can read this question. It's very easy. Okay, so today what we have started, So what did we start today? Today we have started initial recognition. This is the case where we purchase with cash. So in the next video these four will be done. Self-construction, deferred credit, exchange and finance lease. In the next video we will cover these four topics and questions related to them. I hope you had fun. Thank you very much. Take care. Bye bye. Love you all. See you in the next video.